All right. So without further ado, let's begin the first session for this. The first meet for this session. So today we're going to be talking about Candlestick 101, right? Candlestick 101. Now, we've been seeing price buying, price selling, price selling, we've been seeing price buying. But we know that all these are represented with what? With candles, right? All these are represented with what? With candles. Now it's either the bullish candle or the bearish candle. So how do we understand what these candles look like and how can we use them to our advantage while trading? Now that's what we're going to do. We're going to dissect the bullish candle and the bearish candle and understand what the concept behind it. Now, there's something called the HOLC, which is the high, the open, the low, and what? And the close. And we're going to find out what in the candles. So let's take, for example, that this is what? A bullish candle. So for context, I'm going to highlight this guy green. Okay, so this is a bullish candle now, for example, right? Now, the moment market open, this is the candle, right? So the moment the market open, where's the candle again? Hold on. Okay, this is it. Now, the moment the market open, it begins right here. So the first thing we have right now is what? Is the open. Do you get? This is what? This is the open. Now, from the open, this is where this candle forms. Now, the direction will either tell us if we are going to go bullish or what? Or bearish. And when the direction takes place, the color of the candle what? Changes. Okay, so you can see right here now the candle what? The candle open. So we're going to call this part what? The open. Now, what next? Now, since we're talking about a bullish candle, we're expecting it to go up, right? So let's say, for example, now from the open, we have price sell to the downside a little bit. Now, when it's selling to the downside, now obviously below the open, the candle is going to be a what? A bearish candle, right? So below the open, the candle is going to what? To look like a bearish candle. Now, it looks like price is selling, right? So this is the candle illustration. And this is the what? The structure illustration. Don't forget, this is the candle and this is the structure. So meaning what the structure is doing is what the candle will form. What the structure does is what the candle will do. So follow it up now. So the moment we have our candle open, this is the open. Now what happened next? If price move below the open, we are going to have a bearish candle. While if price move above the open, we're going to have what? A bullish candle. So now let's see now from the open price started selling to this point, right? Fine, it's bearish. Now, from this area now, let's say price starts going back up towards what? The open. Now, if price start going back towards the open, from that area, we call that level what? The low, right? So meaning because price was here last. This is as low as what? As price got to. So meaning from this area right here, if price is going back, this is going to be regarded as what? As the low. Okay, let me do that. Okay, now you can see that this was the lowest price got to, which is what? The low. Now from this point, price started what? Pulling back up, pulling back up, pulling back up. And that is where we have what? The wick. So meaning the wick tells us what? Where price was last. Okay, so the wick tells us what price was here last. Now remember what I did. Price from the open right here, price started was selling. Price started selling down to this area. Now this is the last place the candle got to. From that area, what we start having price pull back up. Now it's pulling back up. It's pulling back up. Remember, it's still bearish, right? Because it's below the open. Now, if price start pulling back above the open, okay, so we're going to name this area what? The low. Low. Right? So remember, this is what? This is the candle representation, and the other part is the structural representation of the candle. So meaning what the structure will print is what the candle will show. Okay? Now, you can see now that price is now finally above the open. So from the open right now, price is finally what? Above what? The open to what? To this point. And at that area now, we can now have what? Can now finally have a green candle. Now, why is it a green candle? It's a green candle because what? Price is finally what? Above the open. Right? Price is what? Finally above the open right here. This is currently where the price is right now. Now, price started going what? Price started going bullish, bullish, bullish. Now you can see that the candle will want to start moving bullish to this point. Now you can see that is what? It's a full bullish candle. What does that mean now? It's a full bullish candle. Now you're seeing the candle as a what? As a full bullish candle with the low. We have the open and the low, and this is currently where price is. Now, let's take, for example, now from that area now, price start is selling back down towards this area. Now, this is the highest price has gotten to. So meaning if we are going to be selling back down, we are going to have this area as what? As our high. Why is it going to be our high? Because this is the last point market got to. So meaning if price is going to be dropping down like this, hold on. Price is going to be dropping down like this, down to this area. This is what the candle will look like. Now, the structure is printing out what this candle would look like, bullish or bearish. Okay. So let's take example now. Price dropped down to this area. Thus, the candle is now looking like what? A doji. What does it mean? It has a wick above, it has a wick below. Now, from this point in the structure, now price started what? Started going bullish again to this point, right? So from that area where price is, price will start going bullish, meaning it's going back up to that area, and now it's going to look like what? A full bullish candle yet again. Now, the market is at the candle is about to close. Now, this is the highest price got to, right? So let's say we're going to now have a retracement once again. If we're having that retracement right here, what are we going to still see? We're now going to see this place as what? At the highest, and price is going to what? Is going to start dropping back down right here. You can see that, right? So meaning at this point here is what we'll call what? The high. This is what we'll call the high of the candle. And I'm going to put it there as what? As the high of what? Of the candle. And now let's say the market closes, or rather the candle what? Closes. And from this area, this is where the candle what? Closes from here. Boom. And this is now where we'll write our what? Our close of what? Of candle, which is what? The close. So what does this mean now? we've had a what? A complete candle print. Now, this works on any time frame, but this is the idea of what? The idea of candlestick, right? How does it look like? When we say candle like this, what is happening inside that candle? Be it the weekly candle, the daily candle, the H4, the 30 minutes, 1 hour. If we see a candle like this structure comes to mind. You understand? So if I come here now, like I see all these candles that you're seeing now, if you pick out one of them, like this one we are seeing right here now, this one, right? This is a 30 minutes time frame, but this one you are seeing right here is the same example. What do you see first of all? We have the open. You can see this one here. We have the open, right? You can see the open. We have the low. You can see the low. And we have what? The high. You can see the high. And after the high, what do you see next? You see a close right here. And this is a what? This is a bullish candle representation. Now, let's go and find another one again. Take this candle, for example, right here. We have the open. So all bullish candle open at what? At the bottom. Now we have what here as what? The low. We have this high as what? The high. And price drop back down. And what happened next? We have the close. This is what? This is the close right there. Okay, so you can go and mark that out wherever you go on any time frame on your chart and you understand what I'm talking about. Okay, so that is what a bullish representation of candlesticks. So let's try out the bearish representation now. Now, we know that our bullish opens at the bottom. So what about our bearish? Now, I'm going to mark this out, bring this here. Okay, so the same representation right here. Now, let's take, for example, that this is where price opened from, right? The price opened at the top right here. Price opened at the top. Now, I'm going to bring out the structural representation of it. Now, we have this as what? As the open. Now, this is a bearish example. Open. Now, what did I say? I say if price is above the open, it is what? A bullish candle, is a bullish print. If price is below the open, it is what? It is a bearish print. Okay, so now take a look at this. Now we have the open, right? Now, from the open, price started pulling upwards. And if it's pulling upwards, what do you expect the candle to look like? You expect the candle to what? To be bullish, right? Meaning from the open, price started going upward. This is the highest price got to right here. And since it's the highest, we are going to what? Mark that as what? Our high. Right? This is the highest price got to right here. This is the highest. Now it's a full bullish candle. It is what? A full bullish candle. I'll mark this from here. So this is what? Our high. Okay. Now from the high, I'll put that as what? Our high. Now from the high now, price started pulling back down. Now from that high, this is the highest price has gotten to. From the high, we start what? Start pulling back down. And since we're pulling back down, what is the candle going to do? From that highest, the candle is going to what? Start dropping And now the moment the candle leave the highest, you're going to see a weak print, meaning price has been there before. Now it will start dropping down to where? Down to this area. Now remember, it's still above the open, so we still regard it as what? As a bullish candle. But now what if price start falling below the open like this? What's going to happen to the candle? The candle is now going to what? Switch to what? To a bearish candle right what? Right here. I can see that this now is going to be a what? A red candle right here. So now you can see now that the candle has changed color automatically because what? The structure right now looks what? Looks bearish, right? It's selling. It's below what? The open. Now we are going to have what? We're going to have the candle change color. Now the candle what? Changes color at this point. Okay, so now look at the structure again. From this area, price type pulling back up to the open, right? So meaning we're going to have what? Price push back towards the open. Now it's going to be looking like what? A bullish candle again, right? It's going to be looking like a bullish candle. And since price was at this point, we're going to have a wick there to tell us that this is the lowest what price has gotten. Now it's going to be looking like a doji candle like this. So what next? From that point where price put into, we're now starting to go to drop lower. Meaning from that point it was, price will start dropping, and as it goes below the open, immediately it's going to be a bearish candle. Now price will what? Price will start dropping heavily. Now you see now that it's looking like a what? A full bearish candle at this point. Because of what? Because of the structure. Now price keeps on dropping hard, right? So you can see now that the candle is going to be looking full bearish. Now we have that pullback again. Now so having that pullback to this point, what is going to happen? We're going to have price tell us that this is the lowest we've gotten, and we're going to be having that what? That pullback to this point right here. And now we can finally mark this what? That this is the lowest price has gotten to. So we'll mark this as what? As a low. Okay, now that we've marked that as a low, this is currently where price is right now. Okay, this is currently where price is. And now let's say the candle is about to close. So from where it is currently, the candle what? The candle closes. And boom, that's the end. Now we have what? This print. And we're going to mark this what? As the close of what? Of a bearish candle. Now, you see now that we have structure, right? We know that we have structure at this point. Structure. We have structure here. And we have what? We have the candle print of the structure right here. Candle print of the structure. So this is going to be a bullish candle print. And this is what? This is a bearish candle print. Now, this is the only thing, this is all you need to know about candlesticks. Now, this is candlesticks, right? Candlestick pattern, candlestick pattern, candlestick pattern. Now, in the candle, you see structures, right? Now, for a bullish structure, what do you see? You see that price is what? Price is ascending higher. Okay, You see now that what price is ascending what higher in a bullish structure. In a bullish structure, price is ascending higher, and in a bearish structure, what is happening? Price is what descending lower. Thus,
Okay, this thing is on.
thus the
Short
trend,
term.
thus
That's why I
what
was looking different in my
the
eyes since.
thus the trend of what of the market. So we know that we have bullish trend, we have bearish trend. Why is the trend bullish? Why is the trend bearish? Because of what? The structure. Okay, so I'm going to take my time to explain this structure. So in this, we call this what? A continuation phase. This is a continuation phase. Then inside here, we'll probably have a reversal. So the market goes like this. It's either what? We are continue or rather continuous phase or what? Or reversal phase. So if we're in a bullish trend, price is going up. If we say the market is continuous, what is it going to do? It's going to still go up, right? If we're in a bearish market and price is going down, what is it going to do? It's going to continue going down. This is what we mean as what? As a continuous phase. Now, in a reversal, if price is what? Selling, what is it going to do in a reversal? It will switch to what? To buying. And if price is what? Is buying, in a reversal phase, what is it going to do? It's going to switch to what? To selling. Now, this is the dynamics of the market. Meaning, it's either we are looking for a continuous phase or a reversal phase. And there are patterns to look for. So when trading a continuation phase, there are patterns to look for in what? In a bullish. So this is what? This is going to be a bullish. This is a bullish to bullish. Right? This is what? A bullish to bullish. Now, this one is going to be what? A bearish to what? To bearish. That is
Yes.
a continuous, right? Now, in the reversal phase, we're going to be having what? A bearish to what? To bullish. And in the other reversal phase, we're going to be having what? Let's go bullish to what? To bearish. This is it. And this other one, first one is what? A bearish to what? To bullish. Now, this is the whole dynamic we need to understand in trading. Now, we've done the whole what? Candlestick 101. Now, aside these 4 things I drew here, this is the only thing the market will do. Now, the market will not do anything other than these 4 phases we've drawn. Now, aside this, we have something called what? The consolidation. When I say consolidation, now we know the market is either going up or what? Or going down, obviously, right? Now, if it's neither going down or going up, what is it going to do? It's going to range. It's going to what? Range. It's not going up. It's not going down. It's just what? It's just ranging. This is what we call a consolidation. This is what we call a ranging market. Ranging, or we call it what? Consolidation. Consolidation. Okay. Now, we can be buying. Price can be buying, and we can have what? That consolidation. Meaning, it's neither buying nor selling, and thus, price could continue to buy. Right? Now, we can be buying, price have the consolidation, it buys and what? and reverses for what? A sell. So you see, in the whole dynamic of everything I'm talking about, we still see what? We still see these guys. So these guys, see this thing I circled right here. These are what we see every day in the market. So you come into the market, what am I looking for? I'm looking to buy. You are buying. If the buying is turning to selling, what is it going to do? It's going to turn to what? Bullish to bearish. You're looking to sell, you're looking to sell, you're selling is buying. What is it doing? It is reversing from what? From bearish to bullish. Right? You are buying, it has reversed, it's buying. You are continuing your buying to buying, right? Meaning you are going from bullish to bullish, you are continuing the phase. Now, you are selling. You come into the market to continue selling. You are what? You are continuing the phase. So the key to Forex, the whole thing we are trying to learn here is the pattern to be able to spot all these things over and over in the market. Right? So you understand now how the candle prints. So meaning, if you are seeing a bearish candle, you know that you are going to be seeing bearish structures. Okay, so I'm not going to talk about structures today. Our next class will talk about structures. But this whole understanding, we'll talk about the open, the high, open, low, close. And we talked about it as from candle to structure. And I gave you the example where we talk about the continuous phase and and the reversal phase. Okay, list out this one, which is the bearish to what? To bearish. Okay, and from that we jump into the ranging. I made an example here. So with that, we've come to the end of this first phase of understanding what candles. So let me just make a few examples, and I will be using the what? I'll be using the daily chart for this example. We're running out of time. So let me quickly clear all this. All right, we're looking at the daily chart now. Now, let's make use of this example right here. Now, this is a daily chart, obviously, right? So meaning all this happen a day, one day. So let's say now, let's say the candle opened by 12 o'clock, the next day by 12, right? So meaning if we see this candle opening in the start of the day, what are we going to see? We're going to see just this line, right? We don't know if price is going bullish. We don't know if price is going bearish. But all we have is what? Is the open, right? Meaning price is ready to move for the day. Is it that we are buying or is it that we are what? Selling. Now, obviously the last day closed as a what? As a bullish candle. So meaning everybody is looking towards to buy. Let's buy. Yesterday was buying. So today we what? We continue the buy. Now, what did the market do? Now, this is where a lot of people start jumping in for their buy. From the open, what the price do? Price started what? Started going up. It's looking like a bullish candle. Everybody's jumping in. Now, this was the highest price got to. And from that point, what happened? Started what? Started turning around, started coming back down. And the moment it went below the open, what happened? It turned to completely to what? To a bearish candle. Now, from inside there, we start seeing bearish structure. I don't know how the structure looks like, but as far as it's continuing the drop, we know it's what? Bearish. Now, you can see this was a low price got to for that day. Right here, this was the low. Now, price got to this point, right? I'm talking about this candle right here. Price got to this point, that is the lowest. Now, from the lowest, what did price do? From the lowest, price moved and what? And started going back up again. Now, from that point, we have what? The close of the day. And that is it. Now, if you look at this illustration now, you know that from the moment we have price going below the open, everything inside here is what? Bearish structure. everything inside here is bearish. So now what I'm going to do, I'm going to mark the candle high, open, low, and close, and we'll jump into the lower time frame to see how it looks like. Okay, we have just 7 minutes left. So I mark the high so that we know that it's this candle we are looking for. This is 25th of January, right? You can see 25th January. Okay, then I mark this as what? As the low, then this point as the open, and this point as what? As the close. So let's jump into 30 minutes now, which is the mid time frame, to see that day. Why did it turn bearish? Let's see, 25th. This is what? This is the day. You can see now. This is the day. This is the day that we were analyzing. Now, the day before this candle opened, what did we have? We have what? A bullish structure, meaning that candle closed as a bullish day. Now, the next day, everybody's expecting what? This day to what? To continue what? That direction. But it came as a shock to everybody. Those people that did not know, what are they going to be looking for? Buy, buy, buy. Now, you can see the moment price opened, what happened? Price started dropping. Now, initially, it started as what? As a bearish candle, right? Now, let's put our candle right here. Now, from the open, price was bearish. Price was bearish got to this level, and the moment it got to this level, it created what? A low. Now the price created a low. This was the lowest price got. Now it started buying back. We are here. It started buying back, started buying back. Now it's above the open. Now everybody's like, okay, it's buy, it's buy, it's buy. We are buying, buy, either buy, either buy. This is what? The highest price got to as what? As a bullish candle. Now, from that moment, price started dropping back. Now, this is where we are. Price started dropping back and created this level right here. And now we are now bearish. From that level, price started going back to the open. And the moment price touched the open, what happened next? Full bearish candle. And from that full bearish candle, we made a low of the day. And from the low of the day, price went up to this and what? And closed. This is what? A full bearish candle day. Now, this tip will tell you that as far as we are below the open, any price we see here, what? We start looking for continuations to the downside. You should not be looking for buy unless you see the pattern to tell you that we're buying. Because as far as price is below the open of the day, we are what? We are bearish. Now, you can see that a lot of people were forcing the market to buy because yesterday was bullish. So you see now, price looked like it was buying. From this place, price looked like it was buying. Everybody buying, boom, that stop loss get hit. Price looking like it's buying again. Everybody buying, boom, that stop loss get hit. They did not understand that what price has already what switched direction. And for those using our strategy, we already know where we would have placed our sell since. We already know we would have caught the sell from, I don't need to talk too much, would have caught the sell from here, and we all know why, but we are getting to that aspect. So we would have sold from here and profited off this. Okay. Now let's analyze the bullish day, which is the last thing we're going to do before we end this. We have just 3 minutes more. Okay. Now, this is where we are. Look at this right here. Price opened. This is where this bullish day opened. Price opened. What happened next? Price tried to sell. Tried to sell, failed, created a low, and from there we what? Started having this full bullish candle, made a high, right? From the high, price dropped, and what? From that point, it closed, right? So inside this, as far as price above the open, we had what? A full bullish day. right? We have 2 more minutes. So now marking out the open right here, marking out the low, marking out the close, and marking out what? The high. Now we drop into the 30 minutes to see that day. And what do we see? We see what? An illustration of a full bullish day. Now you see, price opened right here. It tried to go bearish, right? And started going above the open. And we have what? A full bullish candle. Now price dropped back again towards the open. And from that moment, it started what? Going bullish, 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 bullish to what? Towards this area. And from there, it created a high and came down to close the day. Now, those that know that as far as prices are above the open, we are looking for buys. We are looking for buys until we see the reversal telling us to sell. Now, a lot of people now will be forcing the market to sell from here. It's selling, let's sell. But we are buying. Everything tells us that the direction is leading towards the upside, just like the way we saw markets selling. So this is a typical example of using the candle to tell what the direction of what the day and the lower time frame structure will do. So I think this rounds up. If you have any question, you just refer to me and I'll answer. So thank you for the class. Do have a good night rest, everybody.